morning, traders. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. A beautiful, blessed day, it being 14th of January 2026, and we are going to look at what is ahead of us. Special shout out to Wangai. Big M, welcome. Thank you for joining the stream. I would want to start by looking at the promotion that we have just launched recently called the loyalty program. We traders have an opportunity to with the loyalty program, you earn rewards while you are going to be trading. This is going to be the biggest one we've ever had, up to $500,000 in cash prizes. There is going to be a supercar up for grabs, an all inclusive luxury vacations and high-end electronic devices. How does it work? You do trade and earn the TRP or the trophy rod points. You are going to level up from a rookie to a legend. When you earn the trophies, then you are going to allocate them to unlock various prizes. Now, for the rookie, this is going to be 25 trophy rod points per $1,000,000 in trading volume, which is really, really achievable. And for the rising star, you're going to earn 30 trophy rod points for every $1,000,000 you do have in terms of trading volume. The pro is going to earn you 35 TRP and the legend is going to earn you 40 TRP. Quite interesting. Once again, over $500,000 in cash prizes are up for grabs. I would want to go to yesterday. What did happen with the news releases? We were anticipating inflationary numbers coming out for the United States, legend of America, and indeed we did see inflation cool down drastically. Now, looking at the news release, this was the official document that was released at that particular moment in time. This is 8:30 Eastern time, which our local time, Nairobi time, is going to be 4:30. Now, looking at the information, the highlight was the core CPI, where the index for all items, excluding food and energy, because those are very volatile, did rise 2.6% over the past 12 months, as shelter indexing did increase by 3.2%. And this is something that we have been seeing worrying the United States economy, where shelter has been becoming a problem. Other indexes with notable increases over the last year include medical care, household furnishings and operations, recreation, and personal care. Quite interesting. Now, this information that did come out did affect prices, and we are going to look at the charts. If you have any charts that you would want me to look into, kindly put it in the chart section. I'll be glad to digest it for you. Afterwards, Trump did hold a meeting, and this was in Detroit, where he did claim victory over US economy. It's almost 1 year. In the next 6 days, it's going to be exactly 1 year from Liberation Day, where he did take credit of what's been happening. Yes, we have seen inflation cool down, but also unemployment has been ticking to the upper side. We have seen people lose jobs in the United States of America. And yesterday in Detroit, at the Economic Club, the US president delivered a speech, and this was quite interesting, where he did take hits at Jerome Powell. We have been seeing the two gentlemen have a collision over the past. We have been seeing there is charges currently ongoing against the Fed chair, Jerome Powell, whose contract is due to end on May of this year, but he's supposed to stay in power in the board of members essentially up to 2028. And looking at it, he did have a few shots at him. He did call the Fed chair real stiff Fed. They kill every rally. He said you have a good quarter and they want to kill it because they're so petrified of inflation. Now, speaking of inflation, today we are going to have more news releases in relation to the dollar affecting inflation. Now, today is going to be PPI numbers. Essentially, we want to pay attention to, it's going to be two news releases for the month of October and for the month of November. And these are going to be year-on-year releases. I will want to pay attention to the PPI numbers year-on-year release up to November, which is going to consolidate all of the news releases. Now, why do we have two news releases? Last year, we did have the government shutdown of the United States towards the end of the year, which did affect the Bureau of Labor Statistics, which is the body in charge of releasing these news releases to the public. Now, looking at the forecast currently at the moment as it stands, it's at 2.7%. The previous number does stand at 2.6. If the numbers do come out lesser than 2.7%, we do anticipate a weakness in the dollar. Whereas on the other hand, if the data does come out higher than 2.7, we do anticipate a strength in the dollar. Quite interesting noting how this is going to play out in relation to what's going to happen in the next 14 days and counting, where we do anticipate the Fed Reserve to have their first meeting of the year. Now, there's a 97.2% chance that the Fed Reserve are going to hold on to interest rates where it is currently at the moment, between 350 to 375 basis points, whereas there's only a 2.8% chance that the Fed Reserve are going to lower interest rates by another 25 basis points. But the highlight is going to start picking up from 18th of March, where we can see now the statistics starts to go down, where there's a 72.6% chance that the Fed will hold on to interest rates and a 26.7% chance the Fed Reserve are going to lower interest rates. As the year does progress, we do anticipate the Fed Reserve to cut interest rates, and by 17th of June, the statistics are 47.6% chance that we might receive the first interest rate cut, which is going to be around 325 to 350 basis points. Looking at the statistics yesterday while we were doing the analysis session, the probabilities of having an interest rate cut was almost 95.6%, but today we are seeing the statistic jump up aggressively to 97.2%. Now, the data that's going to be released during New York session today, once again, the highlight of the day is going to be PPI numbers, where we do anticipate inflationary numbers to come out at 2.7%. If it does come out lower, a weakness in the dollar is anticipated, whereas if it comes out higher, a strength in the dollar is going to be anticipated. We are going to have this session live on our socials. Keep a keen eye on our socials, and we are going to digest the data as it unfolds. We did have trade balance coming in for the Chinese yuan today at exactly 6 a.m. in the morning. This is going to be East African time, where the numbers did come out at $114 billion. Quite interesting, noting that over the month of December, China did export more than it did import. Looking at the graph here, we have been picking ever since towards the end of last year. The balance of trade has been moving to the upper side, signaling that yes, indeed, the economy of China is really holding on at the moment, which is the perfect time for us to take these opportunities. We have the Shield 500 account where we traders have an opportunity to.
Mimi ni kijana wa Kimasai. Kama vile Mmasai anapotumia ngao kama ulinzi kwenye jamii yake, ndivyo hivyo HFM tunakuletea Shield 500. Hii inafanya vipi kazi? Wewe kama mteja mpya wa HFM, unapofungua account leo na kuchagua Shield 500 kama account yako, mtaji wako wa kwanza usiozidi $500 utakaouweka kwenye account ile utakuwa insured endapo utapata hasara yoyote ndani ya siku 25 za kwanza za kutrade. HFM itarejesha ile hasara uliyoipata ili uzidi kutrade. Ofa hii inapatikana ndani ya siku 10 tu baada ya kufungua account. Fungua account leo, anza leo, mtaji wako umelindwa. HFM Shield 500. See you in the trading room.
You have an opportunity to open the Shield 500 account. Whatever money you do happen to deposit between $10 and $500. If you do incur any losses within the first 25 days of trading, we are going to cover you up to $500 in tradable funds only with HFM. I would want to switch gears into the charts. This is where most of the money is usually made. And I would want to start with the precious metal gold, whereby we did see yesterday gold prices make all-time highs. Ever since the beginning of time, we have never seen gold tap into 46.35, and that was just after the CPI numbers was released. This particular candlestick here was when CPI was released, and we did see buyers coming into the markets aggressively. Prices did tap onto the highs that was formed on Monday morning, but immediately reversed to the downside, closed almost exactly where the opening price of the daily candlestick was. But ever since Asian session did open today, we have seen buyers rally the markets to the upper side. Prices did retest on the 50-period moving average, signaling that yes, indeed, buyers are in control over the markets. I would want to keep a keen eye on the all-time highs that we are having currently at the moment, and if I can just highlight it, If we do have this candlestick closing well above the all-time high, the ceiling has been broken. Potentially, prices could move even further to the upper side. It is pre-London currently at the moment. We are looking at the markets opening in the next few. London session essentially opening in the next few 50 minutes, 49 minutes or so and counting. If we do have candlesticks closing well above this region and the data does continue to come out negative in relation to PPI during New York session, I will consider looking at net long opportunities. Now, this is only for educational purposes and not investment advice. But looking at silver, silver did tap into $88 an ounce yesterday, all-time highs. If we can just highlight yesterday's highs, was 88.9. Earlier on today, we did see silver tap $90 an ounce for the first time in history once again. Now, looking at silver, ever since the year did begin to where we are trading at the moment, silver prices are up 26.14%. Quite interesting. This is quite an aggressive move to the upper side, considering this is less than 200 hours of trading. Essentially, this is the second week of 2026, and silver is already 26% up to the upper side. And we are looking at what potentially could happen before the year does end. We do have a lot of news releases. We do have a lot of fundamental geopolitical tensions currently ongoing at the moment, tensions in Iran. We are looking at the political instability also between the split between the Fed Reserve and the government, essentially, who is going to come and take over Jerome Powell after Jerome Powell does leave office come May of 2026. Now, investors are looking at this information and we are seeing traders alike rushing towards safe havens. Currently, at the moment, we are seeing silver prices trade well above the 50 and the 200 period moving average. If we do happen to break above the highs that was formed during Asian session today, I will consider looking at more net long opportunities on the silver metal. Now, on black gold, which is oil prices, we were anticipating a lot of activities, and indeed we are starting to see the markets pricing the information that is happening currently at the moment. Now, Venezuela, when you look at Iran, when you're looking at the tensions that's currently ongoing at the moment, we have seen oil prices jump up from $56 a barrel, currently trading at $60.73 a barrel. And if I can just this is the region of resistance that I was looking at in the past that happens to be a point of interest. Last time prices was around $60 a barrel was towards the start of December, where prices did tap into that region, but we had a massive correction to the downside where oil prices lost more than $5 a barrel in a short amount of time. But we have been seeing buyers now drive the markets to the upper side. We do have a clear breakout on the $60 a barrel mark, which is a psychological level. It's an institutional level, to be exact, where prices did break out to the upper side. We have a retestment, a retest back onto that region, and I will consider looking at more net long opportunities to the upper side, but this is going to be dependent on the data that is going to be released during New York session today. But if we do happen to close above yesterday's highs, I will potentially look at more net long opportunities of oil prices to move up to $65 a barrel in the near future if the data continues to come out negative for the United States economy. Now, looking at the dollar index, it is quite tricky to digest the data because we are looking at metals forming all-time highs. We have looked at silver, we have looked at gold. Oil prices also is trading above a key level. And when we are looking at the dollar index is strengthening currently at the moment. Now, why is this happening? Now, the US economy is still strong. We have seen GDP move to the upper side, increase to the upper side. Yes, indeed, we have seen inflation tick to the lower side. Employment has been ticking to the upper side. But on the other hand, the country in general is expanding. GDP numbers for the last quarter did come out positive, and for the entire of 2025 did come out positive, hence the strength of the dollar index. Yesterday we did form, it was actually today during Asian session, we did form relatively equal highs around 99 on the USD index, signaling that yes, indeed, the United States is still strong at the moment. And if we can just look at this region that was once a resistance, was broken to the upper side, we do have a retest. If we do break above 99, this will signal that yes, indeed, the dollar is still strengthening. And we want to look at now currency pairs, and I would want to start by looking at USD JPY. Now, looking at the dollar against the yen, we are anticipating Takaichi to dissolve parliament very soon. They are due to have a snap election either on 8th or 15th of February next month. We do anticipate new people to come into the seats, and this usually signals uncertainty when the government usually dissolves parliament. Investors usually take a cautious approach onto how they are approaching the markets. And we are seeing a weakness in the Japanese yen currently at the moment. Are we going to see more stimulus programs come out in the near future as a result of everything that's happening at the moment? Now, the markets are reacting to this information. Negatively in relation to the Japanese yen, where we have seen the dollar gain against the Japanese yen ever since the year did begin. Looking at it, the first candlestick that we did have for 2025 was around this particular region. And ever since, the market has been rallying to the upper side, where the USD has gained over the Japanese yen over 1.55% in 200 hours of trading 2026. I would anticipate more opportunities to the upper side. Yesterday, we were looking at this region during the morning market call, and we did see CPI come out. The markets did grab liquidity during Asian lows, and the markets did move aggressively to the upper side. We do have a region of consolidation. The markets are ranging currently at the moment as we do speak, as we are waiting for the new information that will come out during New York session. Um, Specifically, this is the PPI numbers, but if you do happen to break and close above 159.457, I will consider looking at more net long opportunities to the upper side, whereas on the other hand, if we do have a candlestick that closes well below this range, I will consider looking at selling opportunities and seeing how prices is going to react on the 50 period moving average, if at all we do happen to reach that particular region. Now, looking at euro against the dollar, we have looked at USD JPY. Looking at Euro USD currently at the moment as it stands, when the markets did open on Monday, we did see this was when Fed Chair Jerome Powell did have a speech where they were offered a subpoena from the Senate, and basically they're being granted immunity, but we are seeing the charges still ongoing currently at the moment. The markets reacted to this information negatively, where the euro was considered a safe haven. Prices did move to the upper side, closed well above the 50 period moving average, but failed to break above the 200 period moving average, and prices did retrace aggressively to the downside. Currently at the moment, we are seeing prices trade well above the 50 and the 200 period moving average, signaling that yes, indeed, the dollar is gaining strength as a result of the dollar index that we have been seeing. And this is the effect of why Euro USD has been rallying to the downside. Looking at the British pound against the dollar, we were anticipating employment numbers to come out, but they were postponed. The markets are ranging currently at the moment, neither making clear higher highs, neither making clear lower lows. And as a result, I will want to look at the new information once again that's going to be released during New York session today. If the data does come out negative, I will consider looking at more buying opportunities on GBP USD. But on the other hand, if the data does come out positive for the dollar, I will consider looking at selling opportunities essentially on GBP against the USD. I would want to look at the Nikkei 225 index. Now, the Nikkei 225 index has been doing good. Just looking at it from the start of 2026 to where we are currently at the moment, prices are up almost 8.13 in less than 200 hours of trading 2026. We did see massive buying opportunities, and this was when there were talks of parliament being dissolved. Now, when you're looking at the Nikkei 225, these are equities. Now, these companies usually thrive when there are favorable market conditions, essentially when there are stimulus programs or there are low interest rates, because these companies basically are going to borrow more. They do thrive on a weaker Japanese yen, essentially because if the Japanese yen is weaker and Japan is a net exporter, this means that they are going to get much more capital as a result of them transacting. This means that if Toyota is supposed to sell Toyotas, they are going to receive much more Japanese yen as a result of a weakness in their currency. Hence, we are seeing the Nikkei move quite aggressively to the upper side. Investors, institutions are buying onto the Nikkei 225. As a result, we did see prices retrace onto the 50 period moving average. I will consider looking at more net long opportunities if the data does continue to come out uncertain for the Bank of Japan. Essentially, we do anticipate them to come to the table later on this month. Are they going to lower? Are they going to increase? There are likely options that they are going to increase interest rates in the near future, and we'll want to look at how this is going to affect price action as time moves on. If you have any asset that you would want me to look into, kindly put it in the chat section. I'll be glad to digest it for you. But currently, at the moment, we have digested the major pairs. I don't believe I have any. We haven't looked at equities. Now, looking at the S&P 500, S&P 500 yesterday did break above the channel that we were looking at during the morning market call. We did have a first touch, a second touch, and a third touch. And also to the downside, we were looking at a rising channel. We had a fake out to the upper side. Prices aggressively closed well below the opening price of yesterday, being Tuesday, and we have seen sellers drive the markets today also. I would want to keep a keen eye on if prices are going to have another touch on the trend line. If we do have signs of buyers coming into the markets around this particular region, signaling that yes, indeed, also we are looking at the 200 period moving average. If we do have signs of buyers coming into the markets around this particular region, I will consider looking at more net long opportunities to the upper side. And if I can just identify that zone, this is the zone that I would want to be to keep a keen eye on if during New York session when the markets do open in relation to the S&P 500. Now, looking at the Nasdaq has formed relatively equal highs, a region of resistance around 25,878. We did see signs of buyers trying to break out to the upper side, but sellers aggressively drove prices back to the downside. Similar thing to what we have seen happen on the S&P 500. But if you do have a region of support forming around this region, which is currently forming at the moment, and the data does come out positive in relation to retail sales. So we are going to have retail sales, and we are also going to have PPI numbers, the producer price index. If the data does come out positive, I will consider looking at net long opportunities on the Nasdaq. That's going to be it for the charts. I would want us to go to the trading, the bonuses and promotions that we do have currently ongoing, and the score and raw challenge is still ongoing. We traders have an opportunity to drive home with a brand new BMW 4 Series. Not only that, a UK Premier League trip for two, all expenses paid for. 4 winners are going to be gifted 55-inch TVs. 20 winners are going to be gifted official EPL jerseys of their own choice, and 60 winners are going to be credited $200 each onto their account. Andy wants us to look at Nasdaq. I do believe we have looked at US 100. Would want to finalize by Indeed, the score and raw challenge is currently ongoing. I have a question, an unturned stone, looking at GBP JPY. Now, Euro JPY and GBP JPY are at all-time highs. We have never been in these territories ever since the beginning of time. If you look at it on the daily perspective, we have never tapped onto these particular regions ever since the beginning of time, signaling that yes, indeed, what's happening in the Japanese economy right now is something that it's uncharted territories. I would consider looking at more net long opportunities, basically following the trend to the upper side. We have seen massive rallies to the upper side. This is more than 1.64% in less than 83 hours. Prices moving more than 350 pips to the upper side. I will consider looking at more net long opportunities if the data does continue to come out negative for the United States. Oh, for the Japanese yen, sorry. James Logan, this is GBP JPY. We can see prices are well above the 200 period moving average and also the 50 period moving average. We are seeing prices open bullish. If we do break and close, keyword here is break and close above that region and have a retest on the region that is now an all-time high, forming support, I will consider looking at more net long opportunities to the upper side. That's going to be it for me. Stay safe, take care of yourselves. May the pips be with you.